Welcome to another episode of our weekend market analysis. I hope everyone is doing well. This analysis is for the weekend of October 11th, 2025. Well, let me start with this. After the exciting Friday, I should say, did the bubble burst? Was this it, or is this an opportunity for buying the dip? So we will review the different markets and we will see if there are any opportunities out there. Was this just a one-day hiccup? And hopefully you will find some answers. So in order to do that, let's the events that we have to consider in the past and what's coming up this week. Number one, reminder that the bonds market are closed on Monday, and other markets are open. So that will affect your decision for Monday. Uh, what happened on Friday? Well, the whole sell-off happened when the Chinese decided to stop providing or exporting rare earth for the majority of defense and technology, especially semiconductors, which they really needed. They are the largest source, and like say companies like United States really don't have much access anywhere. So that was the whole catalyst. And then, of course, President Trump comes back and says, well, there's going to be 100% tariffs on imports. Some of the things that we're talking about, not everything, but they put it 100%, but this will be effective November 1st. And then he said he's not going to meet with President Xi and, tit for tat. So we'll see how far this will go. But there's an old saying: you sell and then ask questions. Also, remember the government shutdown continues, so now it's getting a little more serious. With now, some of the employees, government employees, are getting laid off, and basically that's something that is going to affect the economy. So if this continues, next week we have the inflation numbers. Again, all the government formations like PPI and CPI, and also we didn't have our non-farm payroll, so all of those are on hold, so we won't have it. Although they're on hold, but the Fed still, private's in a way independent. So, like for instance, their FOMC minutes came on Wednesday, and it showed that there is again concern about inflation, uh, but also softening economy with the employment, and there's still harmony as far as getting the rate cut. So but the other thing is what happened on Friday. It reminded us, hey, volatility is here, and this is October. So I think we will enter to a choppy markets for next few weeks, and we'll see how that will go. But there's a lot going on, although there's some, again, geopolitics involved as well. Um, this is very important. What happened on um, Friday on the cash market and what happened afterwards in the futures market, I thought this is a good reminder to understand the stock market circuit breakers. Now, if you were around, you were trading or investing in during COVID, it was quite a few times. They actually overnight we hit the circuit breakers. So I'm just gonna have a little reminder of what it is. So please pay attention to that. Also, silver has been on fire as gold, but silver is up, SLV is up about 72% versus gold looks up 52%. I think that the gold miners and they're up like 123%, but silver has been up pretty nicely. Um, One of the catalysts is, London Exchange, there is a silver squeeze, and that has been really helping the movement. We've had this with copper. They did not have enough supplies in the past. We even had the nickel and last year. So there's a squeeze going on in London Metal Exchange. Other thing you have to remember next week, well, we start our big earnings season, the big ones starting with our financials, starting Tuesday. So pay attention to these earnings. So that could be another catalyst for the markets. Again, the banks like Citibank, and you will see Wells Fargo's, Goldman Sachs, they are coming up. One thing you will also notice around the world, we'll have all the central bankers and the Fed members. They will still be speaking around, and markets, of course, pay attention to those. So let me start with this. This is a chart of or the map of Friday's closing on the futures. I've talked many times about risk on, risk off. You want to see there is a harmony in your story. And what you see here, we see a sea of red. And as you can see, the markets, all the indices were down, but the risk, when we talk about risk on, these are risk on, the risk off, like VIX was up over 25, close to 25%. You see the bonds and the fixed side of the things, the notes, they were up. Also, we have Swiss franc and Japanese yen up, they're defensive. Gold was up again, silver was up. Dollar was kind of flat. So generally, sometimes there is the safety. Dollar has had a nice run. We will look at it from the technical point of view. But again, we see the main ones, that the lighter green is Japanese yen, Swiss franc. We see the 30-year bonds, we see the VIX, we see the gold, all of them over 1%. So that's how you see, well, this was pretty serious. And there was a sell-off. We did have a sell-off in crude oil, and I will explain it when you look at the charts. So that's also was something we want to pay attention to. Also on Friday, what we'll see is the major, again, our mags and Magnificent Seven, they were all down big time. There's been a movement, but we had some greens out there when we're talking about the consumer defensive, and we look at the Pepsi, for instance, up nicely. We look at the tobacco, we have used to be the Philip Morrises of the world and Altera, and then we see TJ Maxx and McDonald's. So they T-Mobile. Um, so they are some green with despite the big sell-off, but the major technology where the obviously being affected with all the news, they were the bigs that took the big sell-off. Um, the other thing I'm going to talk about the circuit breakers, and the reason is this is our cash closing, which happens at 1 o'clock. Basically, it goes to 1:15, but this is our cash. Let's say if you do SPY, you see that. Look at the Dow; it was down 878 points. But after hours, obviously, we go again. When I say 1 o'clock, it is West Coast time, 4 o'clock, it's in New York time. We continue till 5 o'clock. So we have another hour in futures market. Look what the futures market continues selling off, 1118. NASDAQ was down 820 and it continued to 1101. Russell was down 7.34 and basically was 2.99%. And then Russell 2000, when we look at this is the futures market, this is the cash, but we were down 3.99%. S&P was down 182 points. And after that, we had another 45 points down, 3.35%. So what happens? So the markets are down even more. So let's talk about what is the circuit breakers. Circuit breakers are that they are halted as far as the let's say New York Stock Exchange, they come and halt. So because of the kind of cooling the heads, stopping the panic. So we have different levels. So we have level 1, and that's when S&P falls 7%. So this is important. Before 3:25 p.m. East Coast time. If it falls 7%, then we are halted for 15 minutes. So this way, again, it allows actually interventions too, but that's before 325. Level 2 is if it's down 13%, again, before halts for another 50, for 15 minutes. Level 3 is if it falls 20%, the trading halts for the rest of the day, so anytime. After 3:25 p.m., and that's what I think also you have to remember. Again, hopefully we will not see this, but COVID was a good reminder these things could happen. If a level 1 or level 2 threshold is reached at or after 3:25 p.m., the trading continues unless a level 3 decline is triggered. That's why you have to pay attention. That's why this 1225 West Coast Summit 325 is important. And I've said it before, this is not for the faint of heart to start trading and being a hero at the last 35, 40 minutes. All right. Now, the other thing is after hours trading. There is no market-wide circuit breakers. The standard market-wide circuit breakers do not apply to after hours trading. Now, if there is a 5% drop for the futures, then stock index futures have an additional rule that halts trading if the index drops 5% from previous day's closing after our trading. Again, I remember seeing that during the COVID. So I think this is important to pay attention. Hopefully we don't see it, but it's always good to be prepared so you don't have surprises, especially if you're holding something overnight or if you're planning of getting into a market. It was amazing Friday when I was trading, especially if you're doing NASDAQ, it was reminded me when again during the financial crisis, during the flash crash we had, reminded me of when the 2016 Brexit happened. I was trading British pound, and it's just the movements are crazy. So please pay attention to those. So let's see, as far as economy, and as I said, that's coming week. Again, we don't have the CPI, and then the Thursday we're supposed to have PPI. We'll see. If the government comes back, we will see these core PPIs. We have the PPI, the producer price index, but see how many FOMC members are speaking. Fed chair will be speaking on Tuesday, October 14th. Bank of England, Governor Bailey will speak. Then we see a lot of Fed speakers, and markets pay attention to that. And we see the 10-year yields have continued going down. As I mentioned, it was more of a bond and again, the fixed income as a safe haven. Now, I mentioned about what happens on Monday when the bonds are closed. You have to remember that the money is not going to bonds. So the money will be limited going to like more aggressive and more risk on. So that's food for thought. When Sunday night the markets open, pay attention to that. Maybe is it possible to have a little bounce back because the money is probably going to go to stocks and maybe Bitcoin or gold. So we'll see. But I will explain a little more when we analyze the markets. So first of all, what happened last week? We had the Dow Jones drop 2.7%, Nasdaq 2.5%, and S&P 2.4%. Now, what we see is, so accordingly, we are down 2.73% in Dow since October 3rd high. October 8th was the all-time high in S&P. We are down almost 3%. The same thing in Nasdaq. We are down 3.64%. Gold was, again, after one sell-off on Thursday, we had bounced back up 3.18%, over 4,000. Copper was down 3.45, and crude oil was down 3.18%. Now, crude oil, of course, one of the major reasons was the peace deal with Israel and Hamas. And that there was always this concern, what's going to happen? And now that has put the markets at ease, at least for now. So as a whole, the markets were down 2.54%. We see down everywhere almost 2% and more. The US mid value was down almost 4.3%, and the small cap value was down 4.82%. When we look at all the indices, we see this is, again, these are the cash. We see what happened. Every one of them broke below their 20-day moving average, including Wilshire 5000. Now, we are very close in Dow. We just touched the 50-day moving average. S&P cash is above us 50. Dow's NASDAQ over 50, and also Wilshire 5000 over 50. This is an important junction. You want to see this support hold. Otherwise, all bets are off. So we want to make sure we hold this. So let's see what happens on Sunday evening and Monday. We see, on the other hand, the yields, after going back up above the 20, of course, Friday, the money went all to the safe havens and the yields went down, which is good for the mortgages, right? And the dollar has had this really nice run. Who would have thought, we're getting close to that magic 100, we will see, close to 99. And of course, again, that's when it moved actually away from the dollar on Friday. The commodities, thanks to crude oil and energy, they were have broken below the 50-day moving average, but gold on fire above 2050. I mean, major move. And look at what happened to VIX. Last week we had talked about, again, what VIX is telling us, there was calm. But also we will review what happens when VIX moves this much in one day. So we'll talk about that. Also, again, internals, when you look at the advanced decline line, this was a huge, so this was not just the Magnificent Seven. It just took the whole market with it. And again, going back to the sectors, we see obviously the discretionaries big time down, and we see the communications just broke below 50. We see technology just broke below 20, still above 50, but also industrial below 50. And we see basic material broke below 20. And I mean, that was below 20 and 50. We broke well below. Financial energy, again, thanks to crude oil below 50. Now, we see a little defensive side, which has been really way below its 20 and 50 for a while. They bounced a little back, but they couldn't break above their 20-day moving average. Healthcare has been the strong one, especially in last month or so. And they also had a sell-off, but they're still comfortably above their 20 and 50. Utilities are heroes. We see that we are nicely above. We're building a flag here and above the 20 and 50, but financials way below. So that's why we want to pay attention this coming week to the earnings, see what they have to say. And then real estate also way below 20 and 50. Internationally, what I did, I used the relative strength for the last 2 months. And what we see that Belgium, Switzerland, and we see South Korea, they are the strongest above their 50 moving average. These are above the 20, above the 50. When we see like Netherlands, the weakest one we see now, China had a big sell-off. Hong Kong, of course, that's a big sell-off. Brazil below its 50, and Japan below its 50. And Japan, you have to remember, they have a new prime minister that it has to be approved. So there's questions, and the markets have been behaving that way besides everything else. How did this is AAI, as far as it comes out on Wednesday before Friday. So we'll see the bulls were nicely up 45.9%. So way above its average. Even the bears are still above their average. So, but there was some bullishness on October 8th. But on the other hand, as of Friday, we see now we are dropped to 29 in the CNN free and greed. And that tells us, now the fear has come into the picture. So we'll see if that will continue, or this will be a good actually buying the dip point. On the other hand, the CNN, I mean, the Citigroup euphoria is still pretty high, 0.7. So let's look at the charts. Where are we now? As I mentioned, this is S&P cash. We are touching right that 50-day moving average. We've been going nicely above the 8 exponential, the 21-day, but now we are right on that 50-day. So Monday is important. Will we bounce back, or will this be a continuation? So again, we have, from the tariffs point of view, November 1st is the date. But is this like a beginning of something? What we have done, we also remember in last few weeks, we've been talking about these targets in Fibonacci. I mentioned about 68.21. We came very close. We've been hugging that, and then we just couldn't break it. So we went and actually hit the 127 and went below that. This is the S&P futures. So will we find this area as a magnet to maybe come back, or is it possible to go all the way down to like 6270 area? Because you see how fast things can move. There's an old saying, we take the stairs up and the escalator, or actually elevator, down. So we see just from here, and that's the middle of September. It took us almost a month to get here, and in one day, how we gave up all that. The other thing you have to remember, that's why we believe in trend lines. So I want to share this. This is the S&P, the ETF. Look at this major trend line we've had. And where did we go? We hugged that and we could not break it. So we are down again to that 50-day moving average. So we'll see if we build a channel here and bounce back and forth. As I said, October could be a little choppy. So we'll see what happens there. And when we look at even in from the Bollinger Bands, we've been hugging the upper band, and then we just broke the 18 and we're touching the lower band. Obviously, the momentum is down, but we're still above 50 on stochastic. So that's the good news. But can we come down, and let's see how flat we were with MACD, and we finally we broke that. And then, but this is what I want to even pay more attention. This is the futures. And we see again, we broke after hugging the Bollinger Bands. Below the Bollinger Band, the momentum is down and MACD crossed. As far as the weekly, it's interesting that even after that sell-off, obviously we're still above the 18-week moving average. We are embedded, and MACD is still positive. That's what I think this Monday is important to see if there's a bounce, but also again, I will see as an opportunity for a short term. Major thing will be Monday night and Tuesday when the bond markets are open. So we'll see how they will behave. As far as the NASDAQ, we see that how we went from upper edge to the lower edge in one day. Again, we are past that overbought. Momentum is down, but we are above the 50. The same similar story, flat MACD. We just broke down. The trend is still up, believe it or not. Momentum is the one which we had to sell off. And Russell, the same story. We were overbought to begin with, so we are on the lower edge again. The same thing with Dow. I'm sorry, this is Russell on a weekly. We'll see. First of all, this is all-time high. We came very close, no cigar, and we are above our 18-week moving average, 100-week moving average. We still embedded, similar to S&P, and MACD still positive. So we'll see if that will hold this week. The Dow was overbought, telling us, end of last week, and MACD has crossed. So we have gone below the lower Bollinger Band. And then when we look at the transportation, we are right on a 100-day moving average. We are oversold. MACD has crossed. So critical point in transportations. And here we are. So with VIX being up huge amount. This is the VIX future. So we are up almost 32%. So, we're going along, the Bollinger Bands were all narrow and boom. So that's what happens. Again, when the markets drop, they drop fast. One thing I've learned generally, at least in my past many, many years following the VIX, when the VIX goes outside its Bollinger Band, likes to come back at least in like for one day. Every time it goes out, comes back. What that means, generally the markets like to rebound after the VIX is up. Now, if there's a big crisis, that could continue, and we've seen it in the past. But in average environment, we usually have a bounce. So it could be a short-term bounce, but we need some digestion because this is way outside the Bollinger Bands. And even the volatility of VIX, I mean, look at some of the things that we've seen. They've all gone outside, come back, and the same thing has happened, the volatility of VIX. As far as the yields, as I mentioned, we were hugging that 18-day, and then we had a nice drop in the rates thanks to movement to the notes and bonds. And we see the MACD is about to cross. And then when we look at 10-year, we see that narrowing band. We close above the 18. Momentum is up. MACD is about to cross. We're touching the upper edge of expected move. The same thing in 30-year bonds, above 18, above 100. Momentum is up. Not quite overbought yet. MACD is about to cross. And then we look at the dollar. Dollar has had a nice bounce. Look at from here. Who would have thought we go all the way, getting to my magic almost 100, then 99.74. Went outside the Bollinger Band, came back in, right? And we just became embedded. MACD still positive. And then when we look at euro, it's opposite story. The thing is, now we embedded on the downside, and we are broken below 100-day, except on Friday we had a little bounce. And then when we look at gold, amazing story. After all the consolidation, we broke out, went outside Bollinger Band, came back in, still embedded, and MACD's positive trend is up. We have an inside day on Friday, so we'll see how that will behave. But I want to share the weekly. We've been outside Bollinger Band 1, 2, 3, 4, 5, 6 weeks in a row, which is very, very unusual. So, well, I mean, it's so much momentum. We can see we are embedded, MACD is positive, and even looking at, we'll see more on the trade of the week. We have been moving, as I said, 1, 2, 3, 4, 5, 6. We've been up 7 weeks in a row. That's unbelievable. Silver has had a really nice run, but see, they went outside and came back and have been consolidating really last few days. They became overbought and they still overbought. MACD is about to cross. You have to remember, silver behaves, follows gold, but also the economy as well. It's industrial, so it has a double the effect. And on a weekly basis, though, we see we did go outside 2 weeks, but we find this week we came inside. Although on a weekly we are embedded and MACD is positive. Copper, after a nice move, well, had again the story we talk about the global economy in China. We broke below the 100-day moving average, and we have become overbought, and MACD is still positive. Bitcoin, beautiful move from the lower Bollinger Bands. We broke below the 100-day. We bounced back, went up, beautiful outside the Bollinger Band, and we came back down. We touched the 100-day moving average, but we didn't close below that, but we closed below the 18. The momentum is down, but still above 50. So what's going to happen? Well, what we see is really the Bitcoin has become really like a technology stock with really high beta. So it can fall, it can go up fast and can come down. So it's more of a, it's not acting like gold, it's not acting like dollar, it's acting more like stocks. So if we have some reprieve from the stock market, this could have a nice bounce from here. We did hit all-time high at 127 plus. So but this 100-day moving average is important. So we want to, again, 110,000 is a psychological number. We want to, again, pay attention to that. So um, nice move there, going down. And crude oil. Again, we have the Iran sanctions. We have the, again, Hamas, and we can see there was, again, relief. So, but we are going outside the Bollinger Band. We have become oversold. MACD is negative, so they are due for a little bounce. Also, the supplies are out there. OPEC Plus has said, well, they're gonna keep the increased supply, so everything is going that way. All right, I hope that was helpful. Let's talk about expected move. Before I go to the charts, again, I just it's important to know what is this expected move. So we use it like for all the indices and different asset classes. So this is the S&P as of Friday. We go 7 days from Friday, which was the 10th. 17th is gonna be our 1 week, Friday, and we look at what is expected move for, based on 68% probability, it will be 192. What that means is the market expects S&P to go up and down about 192 from Friday's closing. And that's how we come up with these numbers. You see how we were doing nothing, and boom, on Friday, we just went outside our expected move. And that's just on cash. But on NASDAQ, the same thing. We were up close to the upper edge, hit that high in the NASDAQ 100, closed right outside the lower edge of expected move. We see in the Russell, the same thing, upper edge to lower edge. We saw in Dow, close doing nothing, close below the lower edge. And then bonds went the opposite. We started low and we closed above the upper edge. So that shows the panic and gamma squeeze. And then gold way outside and hitting all-time high. And then we've had silver outside. We have financials broke below the lower edge. And then we have energy, similar story. We see also crude oil touch the upper edge of expected move and then close below the lower edge of expected move. Bitcoin also, after hitting 127 to 40, boom, uh, just sold off, profit taking. So, and also, as I mentioned, very much related to stocks. I hope that was helpful. A little longer than usual, but I thought that was important to evaluate after a Friday that we've had. Thank you so much.